for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com. And you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days. Whoa!
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Welcome. Well, this is Friday. Quite a week. When you talk about volatility, this week is volatility. But everyone keeps asking the same question. What's going to happen? Does this mean that this is the end of the AI stocks? We're going to have a crash? No, by no means. Because remember, this is different in a sense than the dot-com days. There is so much money. The amount of money that's going into AI is just, we never seen anything like it. It's just huge. They can't let this fail. I was talking about this morning with my members. I said, they're going to do with the AI what they did with the solar panels, Solandra. Remember what Obama had to do? He had to go in and subsidize. No, not him. You and I subsidized Solandra. You and I got hooked for about $550 million that we had to pay. We took care of Solandra. That's the same thing that's going to go on with AI. And here's an interesting story I picked up today. Do you remember the fellow who made $100 million shorting the housing market in 2008? He made a fortune. And because he shorted the market, everybody thought he was nuts. But no, he he did a great job. So he turned around. His name's Michael Murray. $100 million he made, but he took a big risk, huge risk. He then took the money and he started to short AI, and he's been shorting it. He's been taking his hits because two of his stocks that he's been shorting, Nvidia, and I can't remember the other one. It doesn't matter. He's down about, in other words, they've gone down about 11%, we'll say, since he's been shorting it. But he decided to close his hedge fund. He notified his partners and said, the money's not here. Oh yeah, these are way overvalued, no question about it. They're going to crash at some point. But the gold mine to make real money, big money, is what Trump's doing. Trump is now coming up with the idea. He says he's going to increase the term on your mortgage, 30 years, to 50 years. And Murray's right. That is insanely stupid. That's where you want to be shorting. This thing is going to, are you kidding me? This is going to be huge. Because here's what's happening, or what's going to happen. Think about it. So we will have a collapse in the mortgage market like we never saw before. Never saw before, not in 2008. Because this is the end result. What they're doing is saying, look, we'll take your payment. In other words, Trump's saying, we want everybody to own a house. Everybody should own a house. So we're going to do it by giving 50-year 50-year mortgages out. Okay, so basically the government is going to end up owning your house. So the average age is about 40 when someone gets out of college and gets married and wants a house, about 40 years old. You're never going to have ownership really in that house. Now think about how crazy this is. Let's take a $400,000 house, and let's say the interest rate's 6%. It's 30 years. So 30-year fixed, that's 6%. Now, the monthly payment on that house is $2,398. But over the duration of 30 years, you're going to pay for that house interest of $463,352. Now, get this. But let's take that same house and do a 50-year mortgage. A 50-year mortgage, this is nuts. A 50-year mortgage on a $400,000 home. Now remember, you're going to have to pay more interest. Remember, the more you extend, they're going to screw you with interest. So they're going to bump the interest up, let's say 7% on a 50-year loan. The monthly payment is going to cost $2,460, somewhere in that range. And the total interest you're going to pay on that loan, the duration of that loan, is twice what you would pay if you had a 30-year. You're going to pay $1,044,000 for your $400,000 house. What, are you nuts? That is, again, you're going to make the payment, and they're drawing people in by saying, well, you're going to save $290 a month. You're going to pay $290 a month less with the 50-year mortgage than the 30-year mortgage. Oh, I'm going to save $290. Oh boy, okay, sign me up for that one. So they're going to save $200. People are all excited about this because you can't buy a house. Matter of fact, let me show you a chart that Willie gave me. I think that's in the show file. Let me show you this chart yesterday. House pricing. Here it is. I got it. This is nuts. So here's why Trump. And I understand what Trump's doing. Okay, he's trying to get people into homes. Young people can't buy a home. Here's why. Look at this. Housing prices went from, if you go back to 1985, from 74,000 to 468,000 today. But let's go back about 10 years. 10 years ago, the average house was around, I think it was around 200,000. Yeah, 200,000. It's more than doubled in 10 years. That's nuts. That is nuts. Now, the reason why housing has doubled, it's not the brick and mortar, it's the land. The problem is, when you have all these wacky environmentalists, all these granola bar eaters, you know, these people make it so difficult to get a permit. Everything is a wetland. Everything's a wetland. If you're going to build a house in the middle of the Sahara Desert, they'll say it's a wetland, or they'll see some little ant. And they did this to me. I had a piece of land I developed for housing, and they said they found a turtle. A turtle. I think it was a little guy, right? And they said, well, you're going to need this here. They gave me like 25 pounds of forms I had to fill out for the environmental agency. This little turtle. I called him Teddy the turtle. 5 years it took me to get through the permitting because of this turtle, little Teddy the turtle. This is nuts. Now, it took me 5 years to get permission to move Teddy the turtle 4 miles the other way. What are you, nuts? 4 miles. The wacky environmentalist. You want to see her? She comes in. She comes in. I couldn't believe it. Once she stunk. She had hair under her armpits. I mean, unbelievable. Okay. I was going to offer the lawnmower to her to cut her armpits. I mean, typical environmentalist. Doesn't shower. Hair under her armpit. She has those John Lennon glasses, you know, her khaki shorts. Oh, and by the way, a Volvo that's green and dirty. And she works for the state. Just to move the stupid turtle. Anyways, that's how many years it took me. And the cost of lawyers, and I had to hire special people to nose turtles, and oh my God. So anyways, this is insane. That's why the house is that much. And then the city, I started to build my roads, and I had to have certain sidewalks, and it's just miserable. I mean, the amount of regulation to build, to turn a piece of land into housing lots is a nightmare. Now, Trump has changed that a lot, okay, when he was in his first term. Then they unwrapped it again. When Biden took over, they doubled the environmental permitting. God, just to get a sign would take you 10 years. So, matter of fact, you know, what's interesting about that story is that when they created all these environmental issues, you know how every summer they'll paint a bridge? They always paint bridges. They don't fix them, they just paint them. Because the idea is to hire people, right? Hire people. Now, that's a crappy job. Not that painting's crappy. It's that after you hire these people, you finish painting the bridge, they're gone again and they're unemployed again. What good is that? So anyways, they found out they had to paint bridges. They have to go through the environmental department. And all these people they hired, this is under Obama, and he didn't realize this, all the people they hired for the job to paint these bridges all over the United States, they couldn't paint them. Because it was going to take 2 to 3 years to get permitting and he didn't realize this. He's the bright president, Obama. He didn't realize that. And so he couldn't get the, matter of fact, at one point there was this one bridge they were painting, there was a sign. They always put a sign when it's a government job. Ever see a big sign? This bridge is being painted by your government. And then underneath you have all the people. Governor AA Suckface. Then you got Assistant Governor AA Dope. You got all these names. It took over a year just to get the permit for the sign to give credit to the politicians who got that bridge painted. Obama, he didn't know that. And so he was making a big deal. We're going to have all these jobs. We're going to print all these bridges. And he couldn't paint them because he had to go through all these environmentalists, for God's sake. Anyway, I'm getting off the track. But I don't know how the hell I got there. But it's just, yeah, I know how, because I'm showing you why a house doubled in the United States in 10 years. So let's go back to my point. So I don't get this 50-year loan. If you have a $400,000 house, 30-year mortgage, 6%, you're going to make a payment of $2,398. The duration of the 30 years, you're going to be paying total $463,000, okay, for the $400,000 house. You go 50 years, you're going to be paying $1,044,000, not $460,000, double that. And don't you save a month? $290 a month. What are you, nuts? And this is the program. So this guy's right. He says, he wrote to his hedge fund, and he said, I'm closing our hedge fund done. This is where I'm going to bring you. This is what, he said, this is where I made my money before. We're going to really make money again, because this is going to be the worst thing that ever happened. Anyway, so that's what's going on. Now, car loans, if you remember, another thing about this, when they did the car loans from 60 months to 80 months, they really screwed that up because interest payments were higher. Remember, every time you extend the years, the payment goes up. So if you take a $50,000 car loan with 10% down for 84 months, it ends up costing you $5,326 more in interest. More. Because you stretch it out to 84 months. So you got to pay. So anyways, what's happening is 72% of car owners today owe more on their car than they're worth. So this idea of extending years doesn't do any good for anybody except the banks. They become more wealthy. Auto loans now are at a record, defaults are at a record 1.6 trillion. We never had 1.6 trillion in loan defaults on cars. Never. Never. So the lender, now what they're doing is giving you options. Now you're really going to get screwed. They will extend your payment, help you out, defer your payment. They're on your side. How'd that work out? The people are finding by taking these deferments, these payments to extend, like, oh, they're nice guys, they're going to help my family and me with my car. They end up paying 30.2% more in interest. 30.2% increase in debt, rather. Their debt goes up 30%. With these, they screw you again. So that's what's going on. That's what's going on with so this Trump deal with these mortgages. I get the idea. He wants to help people. I just don't see how it flies. You know, our market has the worst fundamentals in history. People always tell us how great our stock market is.
All right.
The only way a stock market's great if you know how to go long and you know how to short. Then it doesn't matter. Then it doesn't matter. But if you don't know how to short when things are going south, you're in trouble. More when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back. Okay, so we had this morning was interesting. When we opened up, the market was down big. I told my gang members it would turn positive today. I said it will turn positive because Trump is going to use his plunger team to come in and buy index futures, and he'll turn the market positive. I said he's not going to let this market go down. And sure enough, look at this. The only thing still down now is the Dow. But look at the NASDAQ's positive 92. It was down about 350 points. So here's what's going on with the stock market. Our valuations are the worst ever. Okay, our fundamentals are the worst ever. We have the worst concentration of money, okay? All the money going to the same, half dozen stocks. We got the worst breadth in 23 years. We got the worst stock buybacks ever, the worst increased money supply ever, which they're going to change in December. We'll talk about that in a minute. And then we had the worst. We have the worst margin debt. Margin debt will cause a crash. People keep asking, what causes a crash? What will happen? Well, you have indicators. As I said, no one should ever be surprised as to a correction coming or a crash coming. You have plenty of signals. Give you an example, indicators. Margin calls are huge, huge. Also, when you have yields shooting up, like your 10-year Treasury yields shooting up, because they're dumping bonds, right? The yields are going up. That'll crash your market. We're seeing yields going up. If you take and check your 10-year Treasury, let's do it again this morning. You got the 10-year Treasury yields. Look at this. They're still up at 4.10. He thinks he's going to get these yields down below 3%. He's not going to do it. So you got our margin calls. That's another big problem we got right now. The margin calls are big. One of the reasons why you're not seeing here, take a look at NVIDIA right now. Here, look at NVIDIA, these stocks. If you take a look at, here, let me just show you a couple here. Here, I'll put up NVIDIA for you. So if you look at NVIDIA, how many times have you ever seen where NVIDIA broke this big? Oh, and by the way, do you see what's going on with NVIDIA this afternoon? Why did the market turn positive? Because look at this. This morning, the market, we had an opening high this morning. Okay, it opened up. It was around, I think the high was somewhere around 191. She dropped down to 180. Okay, and now she's back up to where the high was this morning, going back up because you got the FOMOs back in there using margin debt to buy these tech stocks to run them back up. Okay, exactly one of the reasons why this guy, I think, what was his last name? Michael Burry. One of the things, that's the other thing he was complaining about. Same thing. He says that you got the people all coming in. They got, Wall Street is giving them an historic amount of margin money. Loans. We've never seen Wall Street do this. Because Wall Street's got so much money invested in these AI stocks that they've got to keep these stocks up. And they got to keep these things afloat. So, but again, no stock can get away from these kind of fundamentals. In other words, when you have margin calls, bad breath, declining GDP, declining industrial production, rising unemployment, rising yields, due to dramatic drop in bond prices, stock prices that are higher than their earnings, higher valuations as to price to earnings, price to sales, you don't escape a crash. You can delay it by having margin debt. That's what they are doing. You can delay it if you operate your plunger team. So in the morning when your market's down and you want to turn it around like today, make it positive, you go in and buy index futures. Trump will sit there with his team, get a whole bunch of money from the Treasury, and they'll go buy index futures. So the market's being manipulated, but still, you never escape these indicators. So between the crash indicators, which we have a lot of them right now with green lights on, and you have the worst fundamentals. We got the worst combination. It's crazy. And with the valuations stretched the way they are on these stocks, I mean, this market, remember, this market's been levitating, okay? Think of the stock market's been just levitating all these years. For 17 years, it's been levitating on money supply. Money supplies. 15 trillion increase in money supply. What do they do with that money supply? They take that money and they go to the banks and they say to the banks, I'm going to buy your assets. I'm going to buy your mortgage-backed securities. I'm going to buy your treasuries. You got plenty of money. The first thing you do is go contact all the CEOs of the tech companies and see if they need some money for stock buybacks. Always give them the money first for stock buybacks. Never mind small businesses. And by the way, if you're a smart trader, make sure you always look at IWM. IWM. Those are about 1,900 small mid-cap stocks. IWM. It turned red today. For 50 years in this business, I always tell my gang members, my students about this. This is the best indicator in the world. When people say, what do you think the market's going to do? Look at your small mid-cap stocks. That's the heart. That's the blood. That's the lungs of the market. It tells you the truth. Tells you the truth, like the bond market tells you the truth. The economic indicators you get from the bond market tell you the truth. Okay, and the beautiful thing is, the market doesn't just turn around and crash. It doesn't give you a surprise. You know well in advance, and bonds are really important. So again, these crashes that we have, you know 2 months, 3 months in advance that something's wrong. That something's wrong. When yields are rising because they're dumping bonds, and the bond prices are dropping, that's telling you the market's going to correct or could have a crash. It tells you the truth. Gold, when it rallies, that's another indicator telling you something's wrong. Why do you think that China, Japan, and UK that buys all our treasuries, that buy our debt to keep us alive, aren't buying our debt anymore? Because they got tons and tons of gold. And gold tells you, when people are buying gold the rate they are all over the world, the central banks all over the world are saying, United States, you are nuts. You got too much national debt. You got too much debt. You got too many deficits. Why would we go and buy your bonds? Yeah, we'll sell you all the crap you need for Walmart and Target and Costco, and we're going to take those dollars and we're going to buy gold because of your debt. Your debt's out of control. You never reduce your debt. When have there been a serious reduction of debt? When? When's the last time? I can't think of one. I've been doing this business for 50 years. I've never seen a reduction of a serious reduction of debt. And then, listen to this.
The S&P 500 index fell 0.4% on Tuesday. Shares of Oracle shed more than 2% on a report by trade publication The Information that its AI data center hosting business has so far shown thin profit margins.
So, they're worried about the profit margins, right? We know that. But then what do they do? The next day they turn around and they change the story again, right? They change the story. They keep changing the story.
The S&P 500 gained 0.6% on Wednesday, led higher by the bellwethers of the AI build-out. That would be NVIDIA, Broadcom, and AMD. A near-daily rush of huge new capital commitments and major chip orders have kept this theme in the lead.
Did you hear that? Then, the next day, you get more negative news.
The S&P 500 fell 0.5% on Tuesday, dragged down by 3% or somewhat greater declines in the shares of NVIDIA, Amazon.
Then they turn around the next day and they mask it.
The S&P 500 gained 0.4% on Monday with a huge boost from the 4% jump in NVIDIA after the chip company announced a $100 billion investment.
Unbelievable. They just keep, and listen to this one.
The rebalancing action should quiet some of the common complaints about the strong rally of the past few months being too narrowly reliant on the AI theme, which is now undergoing some harsh questioning about the returns that will come from the industry's enormous investments in computing capacity.
That's nothing new. We know that. The amount of money they're investing in these stocks. And just like yesterday or the day before, what did we find out? All these companies, all these AI companies, they're borrowing money they can't pay back. They're borrowing money for their data centers to power their data centers up. They can't pay it back, and they know that. But they're betting on, and the investors are betting on, that these companies will be bailed out again, like Solyndra was bailed out from the government. And they're right. They will be bailed out. They will be bailed out. And that's why this, you never can remember his name, Barry. That's why he's getting frustrated. He's getting frustrated with being short with these companies. Because, again, don't you think they're not going to bail these AI companies? Of course they're going to bail them out. So remember, we've had, so when you look and you say, okay, what causes these yields to rise? Why are these yields rising? Why are we back up to 4% that could take this market down? Because going up, that means they're dumping, okay? When you have the bond prices start dropping, your yields start going up. And when your yields go up, money comes away from stocks, and it goes to bonds. Now, the only place you can put money in stocks, but it's not, again, you can do it. If you want to protect yourself, they'll tell you to buy value stocks like XLF, the banks and the industrials and utilities and transports, and you'll be fine. Buy these defensive stocks. It doesn't work. There's no place to hide. And this QT that they've been doing since 2022 has caused these interest rates to go up. In turn, it's hurt our GDP growth. It hurt our mortgage rates, our credit cards, all booming. The rates are going up and up. So again, as this drop in bond prices start, the yields are going to just keep going up and up to where you start with a correction, then you get a crash. But they'll come bail all this out. Now remember, when you get the yields, like you look on your 10-year treasury, see these yields going up right now? When you look at yields going up like that, rising yields, okay? Now, sure, when you have these rising over time, that can be positive for a stronger economy, stronger labor market. Consumer starts spending more, starts causing inflation, but you control that by rate increases. But you never reach that point. That's down the road. Anytime you hear people say, oh, yields are going up, that's a sign the economy's going forward, it's powerful and strong, buy. Bull. You'll never reach that point. Never. It's true, but you'll never get there. You'll never get there. The crash will wipe out everything you have. Have everything you have. So again, when they did this QE to drive this market, it was wonderful. I mean, it was wonderful. QE, oh my God, they print all this money and they go buy treasuries and the treasury yields would come down. You could go buy a car, you could buy a house. Everything was beautiful. QE. Stocks going through the roof. Because they could keep on with QE printing money and keep buying the 10-year treasuries to bring yields down. The stock market keeps going up. But what happened? In 2022, everybody goes, inflation's at 9%, which was a lie. The real inflation at that time was 15%. 15%. So the bottom line is this. Our savings are the lowest in 30 years, 2.3%. Home mortgages, the highest delinquencies in 17 years. Car payments, highest delinquencies in 33 years. Credit card, highest delinquency in 30 years. None of that helped us. What helps us is increase productivity and put money into production, put money into businesses. They don't do that anymore. Learn how to short, and you'll make plenty of money. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.